Friday, March 24th, 2023, Maneco 64, home of alternative economics and contrarian views. So we've had a lot of comments from Powell, from Janet Yellen, and they even seem to be conflicting each other about the banking situation. So we're going to look at some charts today and see how the U.S. banking system is not out of the woods yet. Not just the small regional banks, but also the big banks. Before I start, I like to recommend a book that really helped me realize what was going to happen. And this was about 20 years ago. This is when I first got this book. And it's called Fiat Money, Inflation in France, How It Came, What It Brought, and How It Ended, by Andrew Dickson White. Why is it so important? Well, it goes through the experiment that the French did. They performed an experiment in the 1790s with paper money. And they did it very reluctantly in the beginning. And they said when they embarked on this experiment that it would be a one-off. And then they'd withdraw all the paper, and then the economy would have kicked off, or they would have kicked off the economy, get it going, then they could withdraw it and go back to a sane monetary system based on specie, as they called it during those years, i.e. gold and silver. But what happened is it never recovered, so they kept printing, issuing the assignats, and that they did that several times over the next 6 years, and then they tried something new called the mandats, and that failed. And by 1796, it all collapsed. The French public was destitute. There was heavy inflation, of course. The assignats had, they just didn't last. And of course, it was only France doing that experiment. And they even burned the printing presses at the end at the Place Vendôme, I think, in Paris. So when I heard or read about Ben Bernanke's speech in 2002, about the technology that the Fed and the US have of printing money out of thin air, of not allowing deflation to happen, I thought to myself, this is going to be the path we're going to be on. And lo and behold, we're seeing the Fed, as you can see here, increasing, not QE. They increased their balance sheet by another 100 billion in the last week. It's up to almost 400 billion in the last couple of weeks, as you can see. So now to the banking situation. And a few days ago, of course, Powell, during the press conference after the FOMC meeting, said, yeah, we thought about pausing rate hikes, but the regulators and ourselves, we've done enough to keep the banks safe. And at the same time, Yellen was speaking, I think, in Congress and said, it's not, we're not really guaranteeing every deposit. So there's a comment as well from Yellen about a day ago, and she said the following: instituting a 3-day waiting period for amounts over 10,000 is one possible solution to prevent bank runs. That 3-day waiting period. So she's saying if you want to take 10,000 or more out of your bank, you're going to have to wait 3 days. And that seems like she's telling us there's a problem. And I made a video like over a week ago after the SVB failure that Vault Cash is only about $230 per every depositor in the United States. And the Fed used to publish that data, Vault Cash, and they stopped it in September 2020. I wonder why. So the situation is dire, I would say. And why is there so little cash? Well, because when you deposit or loan to the bank, because that's what it really is, they lend most of it out, and they've been lending to very risky enterprises. They've been buying risky securities. And why is that? Well, because it's the central bank's fault, really. They've instituted this policy of zero rates. They have done since 08-09 and QE, and they've made real returns like inexistent. And even now we have negative returns on almost everything. So, and it all goes back to this, because we're going on this fiat money experiment of printing and printing. And it looks like right now, central banks, despite the fact they raised rates this week, the Fed and the Bank of England, they're starting to print again. And I think they have to, if you look at the banking sector. And Jay Powell tried to keep the banking sector and the economy separate, but that's impossible. It shows that the guy is either worried and trying to not tell us the whole truth, or he's just a lawyer that doesn't understand economics. Because the current economy that we have is a highly indebted economy based on consumer credit. And if credit dies off, if the banking sector, which provides most of that credit, is in trouble, the whole economy will be in trouble. So here's the KBE banking index. That's more the bigger banks. This chart doesn't look very good, does it? That's how much it dropped here in March 2020. And yes, it's coming right back down. And then you have another one called the KRE that's not doing very well. And we're seeing First Republic in trouble. They continue to drop. Just look at this chart here, First Republic. And so I think people are getting concerned. And yes, they're going to try to tell people, your bank deposits are fine. We're going to guarantee everything. But I think people are waking up to the fact that these banks actually don't have any money. It's just like a casino. And the other thing I heard from Danielle Martino Booth, she was on with Kitco, is that the small community banks, they're up to here in commercial real estate loans. They represent 70% of that sector. So that's going to hurt them. And I think people are concerned, especially people, even people who just have 10,000 in the bank, let alone over 250,000. Is it really the right thing just to switch from one bank to another? Maybe if you can find a really safe bank, if there is one. But I would say, and this is not advice, but it's something I've been doing. And that's why I'm not concerned about the banks, because I'm outside the banks mostly with tangible real assets. And the tangible real assets par excellence in the monetary sphere, of course, are gold and silver. So if you haven't got any gold and silver yet, and you've got a lot of fiat currency in the bank, I would say it would be a good idea. And you have to look into it yourself. But I do have a few partners that could help you with that in North America and the UK. Bullion dealers that I trust and are reputable. And their details are below in the description of this video, of course. So we're going to look at the markets now. It's a little earlier today. It's 7:45. So we got London time, of course, 7:45 a.m. London. We've got spot gold at 1988. It's down about $5. High's been 95, low has been 85. This is the spot price, of course. Yesterday we traded back above 2,000 briefly, but it's knocking on the door here. Silver did fairly well too. Right now it's up just 2 cents at 23.11. Low's been 22.95 and the high's been 23.21. The Dow future is up 157 points, or 0.5%. NASDAQ is up 0.5% as well, and so is the S&P. It's just below 39.65. To the currencies, they seem to be pretty steady, except for the dollar versus the yen. The dollar is down about 0.5% at 130.31, and the dollar is up 1/3% versus the yuan at 6.85. To the other currencies, we've got Aussie dollar. That's up 1/8%, 66.92, and the dollar is unchanged versus the Canadian dollar. The Kiwi dollar is down 0.2 at 62.38. To the general commodities, well, we've got platinum trading around 9.91. It's up about $1. Not much to write home about there. To the other commodities here, WTI crude is up 0.5% at 70.25. Brent is up 0.4 at 75.80. Copper is continuing to, go up here. The other day we tested 4. Right now, high-grade copper is 4.13, up 1/3%. We'll quickly go through the U.S. Treasury market right now. We've got the 2-year yield up about 2 basis points at 3.82. The 10-year is unchanged around 3.40. So before we finish off today, let's go through some more of the questions from last week. So we've got a question from John, the accountant, from the video. Credit Suisse is just the tip of the iceberg. Out of interest, where do the SNB, Swiss National Bank, get the $54 billion to lend to Credit Suisse? I gather they printed out of thin air. What interest rate on this $54 billion does Credit Suisse pay? One has to laugh at the BS financial Western world of finance. Well, where do they get the $54 billion from? Well, they type it into their computer. In the old days, they wrote it on the ledger out of thin air. And you're right. I'm not sure what the Swiss rate is. Let's have a look. SNB interest rate. I think it's just over 1.5%. About one, it's 1.5%. It looks like they might give Credit Suisse a better rate. So it's just a Ponzi scheme. I mean, you could type $54 billion into a computer. They can do that because, well, the law, the law says it. They created the Swiss National Bank, I don't know, about just over 100 years ago. Question 8 from P. James, and I think it's for the same video. I cannot imagine the supply of collector's coins could match the demand today. Should we be questioning the collectible and if they are real? Well, I'm sure there are collectible coins that are fake, but I'm not sure I understand what you're saying, that the supply doesn't match the demand. It always does. It just depends on the price. And that's what a lot of people forget. There's always enough supply of things for the demand. It just depends on the price. It's like people who say there's not enough gold out there to run a monetary system. Well, gold is money, so there's always enough gold. It depends on the price or on the exchange ratio. The 9th question since the beginning of the week. This is from John 14.6. Hi Mario, Clive is a very interesting man. You mentioned ITM trading. It seems to cater for the US. How about UK? Is this where Queen's beefs come in rather than Britannias and sovereigns? Or ITM do collectibles. In the UK, we don't have the same laws that we have in the US. Back in, I think, 1933, when they had the gold confiscation, collectible coins were not were not part of the coins that could be confiscated. But in the UK, we had exchange controls in the 60s and 70s. So no, Queen's Beasts, they're not any different than Sovereigns or Britannias. The collectible coins, I guess, would be coins prior to the 1900s. I don't know if it would make a difference, though, if the UK government were to confiscate it, and I don't think they will confiscate it. But the thing about Britannias and Sovereigns and Queen's Beasts is that they don't incur capital gains tax because they're legal tender. Just one more question here. This is from Steve Gray. How can I make more profitable investment without incurring much losses? Well, Steve, that's for you to work out. You need to do your homework and know about the business you're investing in. That's what I would say. And don't listen to me or anyone else. Do your own homework. So there you go. With that, I'm going to wish you all a very good day and a very good weekend. Take care. Bye.